Yo, yo, yo.
Yo, yo, yo.
It's your boy Nathan.
And it's your boy Warren.
Welcome to episode 2 of Trading Trenches, your number one podcast for trading news, views, and opinions, getting you the breakdown on the latest assets and investments that you need to be trading and looking into allocating your money. Today, we're going to break down the question, can Bitcoin become a $1 trillion market cap asset?
$1 trillion. $1 trillion. Now, let's just break that down, Nathan. Like, what does $1 trillion market asset actually mean?
Yeah.
Let's
I
just
mean,
break it
market.
down as a what does market cap mean?
Yeah. I mean, market cap is just a fancy term, really, to say what is the total value of something. So, like, um, it's quite easy to define the cost of, a house or a car, but when you're looking at companies, um, it's easier to look at the total value based on the share, the number of shares, and the price per share. So, for example, let's say you had a 10 million market cap company. Well, that company could have a million shares, and each share could be $10 per share.
Yeah, and that's how you would get to that number of 10
Yeah,
million.
that's how you get to the 10 million. Yeah.
So, yeah, that's basically what market cap is.
Mm.
So, if you look at all the major companies, when you're seeing billions and trillions, that's really what they're assessing, the number of shares they've issued out and the price of per share, and then
Yeah.
you multiply that number and you get the market cap figure. So if anyone wants
Yeah.
to do it at home, they can. Yeah, so that's it really. So $1 trillion asset. So how far are we away from that right now?
Yes. So at the moment, current prices, Bitcoin's roughly about $41,000. And um, at the moment, there's 18 million Bitcoin out there. So if you run a quick calculation, you'd get to around about 720 billion dollars at present Bitcoin market cap. Um, for Bitcoin to get to $1 trillion, we'd need an increase of the price per Bitcoin from about 40,000 to 55,000 per Bitcoin, and then that
Well,
would get us to the 1 trillion.
but that doesn't seem too hard to reach. I mean, look, we had a conversation yesterday, and what was it? 39, I believe,
Yeah, yeah,
and now it's 41.
yeah,
So by the time we've gone to bed and woken up, it's jumped $2,000.
yeah, yeah. And if you look at the prices over the last, was it week, 2 weeks, pretty much every day it's another 1,000 or another 2,000 in price. So yeah, the trend is definitely upwards. It's just a question of, can this
When?
continue? Yeah, and if it can and when it can. Um, but if you think about it, for it to move from 40,000 to 55,000, it's an additional $300 billion worth of kind of investment would need to
Mm-hmm.
come into the market. Um, so it's a lot of money that needs to come in really for us to move. But given how it's already been going this year, yeah, I agree. Definitely when rather than if.
Cool. So let's just break down further Bitcoin as an asset class. It's if or as a company, if we was to compare it um, against the biggest companies in the world right now,
Mm.
and see where it ranks, because there's a lot of naysayers. There's a lot of people that are still under the fence of Bitcoin and cryptocurrencies in general. They see it as myself as a not like a taboo, but it's really unheard of, and it goes against the normal investing way of thinking of things. So if we just break it down for people who think it's still a bubble, I think that would be really informative, just so you can compare. So let's go for companies first.
Yeah, do you want to run through it?
Yeah, I can run through it. So in terms of companies, the top 5 companies in the world as of 2021 right now are Apple, and they have a market back of 2.2 trillion. Then we got Saudi Aramco, that's 2.04 trillion. And then we got Microsoft 1.6, Amazon 1.5, Google 1.2, and my main company is climbing. We got Tesla at $773 billion as of 2021. So let's just look at that, and then we've got Facebook of 765 billion. So if we look at those numbers and those companies, which I'm sure a lot of people are already aware of because they use them on an everyday basis, or they know someone who's got a Tesla or interested in Microsoft products or Amazon. Do you know what I mean? Like someone's got an Amazon Prime. So let's just break it down so people can really understand what's going on.
Yeah, so I mean, if Bitcoin was a company, it would kind of be what, the 8th largest company in the world, let's call it, at the current prices. So for Bitcoin to become a $1 trillion asset, I mean, it would probably be what, the 5th, maybe no, the 6th largest company. I mean, it all depends what Tesla does. Tesla's doing well as well, so either 6th or 7th. So it would jump up maybe a point or two. But yeah.
Yeah, so that means
that's kind of where it falls.
That means it's up there with the big boys, really, in circulation.
Yeah, definitely. It's already up there.
And if we compare it to like countries and stuff,
yeah,
where would we get there?
Yeah, so this is now looking at each country obviously has their own currencies, and then you look at the total circulating supply of that currency. So, for example, at the moment, there's roughly $20 trillion in circulation. There's roughly 13 trillion euros in circulation. There's about 3 trillion pounds in circulation. So, based on that, and then looking at the Bitcoin price, at the moment, Bitcoin's like the 14th largest currency in the world, if you think of it as a currency. So
who's behind Bitcoin right now then?
Yeah, so the sort of names that you'd be familiar with, Saudi Arabia is in at 18th, Mexico 17th, Russia 16th, Thailand 15th. So some pretty big countries that Bitcoin's kind of already flipped, like it's already overtaken them. And then in terms of like moving up the ranks, I guess next in line would kind of be Switzerland, which again, you know, a massive economic power. Brazil, again, a massive country, a massive economic power. So they're the kind of names that if Bitcoin was to hit 1 trillion, it would kind of be knocking on the door of Switzerland and Brazil in terms of the total currency in supply for those countries and their value, and then Bitcoin. So it's already come a long way, and for people that still think it's a bubble, it's a scam or whatever, it's come a long way, and I doubt that at this moment there's kind of any turning back. It looks like over the next year especially, we're only going to see prices keep increasing.
So what do you think as predictions for this year? What do you think this time next year we could see Bitcoin at?
Yeah, so So, like when you think about Bitcoin prices, there's some things that you always have to think about, and one of the main things is the halvening. And
Mhm.
what that is Bitcoin's mined daily. So we all know about that inflation, um, where each year, if you've got pounds, if you've got dollars, the purchasing power of that pound or dollar is decreased slightly, and they call it inflation. So on
Yeah.
average, inflation's about 2%.
Mhm.
So on average, the price of bread or milk or any kind of common thing that you buy goes up by 2%.
Yeah.
Bitcoin also has a form of inflation, which is mining, but it's a lot lower than any of these kind of currencies that we're comparing it to. And there's like a total cap of Bitcoins that will ever be released, which is 21 million. So every day at the moment, 900 Bitcoin a day are released, which
Nine
isn't a
hundred.
lot. Yeah, it's 900 a day. And in 2 or 3 years, there'll be something called the halvening, where
Mhm.
Bitcoin will go down to 450 a day. So instead of like more currency getting released over time, every 4 years, less currency is released. And recently, or not that recent, but last year, I think it was about April, May times,
Mhm.
um, Bitcoin went from 1,800 a day to 900 a day. Now, kind of simple economics, supply and demand kind of tells you where the supply of something goes down or is cut in half, even the way Bitcoin has been last year, and demand even kind of stays the same, price is going to go up because there's more money chasing a small amount of new Bitcoin.
Yeah.
So in terms of price prediction, I'm predicting this year we get to $250,000 per coin.
250,000. Are you
Yeah,
mad, bro? Do you reckon?
yeah. That well, I mean, if we look back, so 2017, right, was the year of the halvening, and we went from $1,000 to $20,000 in that one year,
Yeah.
which was what 20x. Um, and so I'm predicting 2017 we go from about 30,000 or so to 200,000, 250,000, which is again not even 20x. That's about 10x, or just under 10x. So yeah, it sounds like a massive number, but I think with all the institutions, we're hearing are getting involved, hedge funds are getting involved, insurance companies are getting involved,
Yeah.
pension funds are getting involved, and I think this year we're going to see a central bank, um, like one of the world's central banks, say we're going to buy a little bit of this Bitcoin, and we're going to see some of these big funds just start piling in, and yeah, I think it's going to go all the way up to 250,000.
And when those institutions come in, obviously that will just drive the price up.
Yeah, yeah, and there's it's a limited supply. It's a limited
Yeah.
supply, and
That's the
the
best thing.
that's the best thing about it. That's the best thing about it. There's nothing like Bitcoin. Um, People are calling it digital gold. Um, Digital
I like
gold.
that. I like
Yeah,
that saying.
people are calling it digital gold or gold 2.0. But
Yeah,
we got to
man.
remember with gold, there's a 2% inflation every year at least, minimum,
Mhm. Yeah.
consistently. So that means in 10 years there's still going to be 2%. In 20 years there's still going to be 2%. Whereas Bitcoin is halving. The inflation, the amount that's being released is reducing, and there's a total cap at 21 million. Whereas gold, there's no cap on the amount of gold.
Mhm.
Obviously we've got to find it in the ground, we've got to dig it out, but the more that there's a need for gold, the more people will go searching for gold in different places. Um,
Yeah.
and and it's arguable that there's a lot of gold still in the earth. Um,
I think the reason why I like it as well is that if you was to have a surplus amount of gold, let's just say, and you wanted to
yeah,
move it, if you was to
yeah,
emigrate and you
yeah,
wanted to move it, those transactional costs alone will be pretty heavy, you know. Whereas if you was to hold that same value in Bitcoin, it's on your phone. You could check it every day. It's on your wallet. And also, I wanted to just really touch upon the fact of, obviously we're seeing these crazy prices go up daily, but do you think it's a reflection on Bitcoin going up or the US dollar going down?
Yeah, well, that's the thing. That's the thing. Is it Bitcoin going up? Is it the US dollar going down? You know, I would say that a lot of people are buying Bitcoin as a store of value. And what we've seen is over the last year, COVID-19 has caused governments to print a lot of money. I saw somewhere that last year the US printed 25% of all the dollars that's ever been created just last year.
Yeah, I think was
And
it Robert Kiyosaki? Was that Robert Kiyosaki? I think that
Kiyosaki.
Chinese guy. Yeah, I think he said that. Yeah, yeah, I read that still. But that's a crazy amount when you think about it. In 1 year alone.
In 1 year alone. And on top of that, that's just the US. You got the UK doing similar things. You got Europe doing similar things. You got Japan doing similar things. So all these countries around the world are just going to print more and more money because they have to deal with debts. They have to deal with stimuluses. They have to kind of get their economy going again from this COVID-19 crisis or pandemic. So it's only going to continue. And if you look at the market cap for dollars and euros, the amount of dollars is unlimited. The amount of euros is unlimited. They can release more and more every day, but the amount of Bitcoin is finite. And that's why I think the price is just going to keep, there's going to be pressure on the price increasing because, yeah, as you said, dollars going down, pounds going down, euros going down.
And the fact that all of these quantitative easing strategies that have been implemented throughout the last year, be it bounce back loans, people on furlough, 5% tax rates on hospitality and restaurants. These are all good strategies. Don't get me wrong; they're great. I mean, considering people are losing their jobs left, right, and centre, and the UK have got at least got a strategy implemented to help their people, whereas some countries haven't got that opportunity. That is great, but in terms of a macro level, with the continuous pumping of money, trillions that we're talking. We're not talking billions anymore. It's trillions. So you're really pumping out all this money, and the amount of money that you're pumping out is devaluing each month, each year. The more that you're printing out, that's just basic economics. It becomes less valuable.
Yeah, no, definitely. And like a lot of people are looking into this now and they're starting to ask the question, like, if I want to just keep my value, like if I just want to keep the value of my money compared to all this money printing, where do I put my money? That's the kind of question that's coming out now. And yes, gold has been, a store of value. Silver has been a store of value. Stock market's been a store of value. These are all things that people put their money in to kind of stay ahead because they know that cash is not, it's not going to make you really money anymore, especially when you consider money in the bank is getting what, 0.1, 0.2%. So,
So that means what? Let's just break it down. If you had £1,000, how much percentage would you get on 0. Was it 1?
Wait, you're gonna have to make me do some maths now. 0
Come on.
times 0.1%. So you're getting. No, that's not even right. 0.0.
That's 10.
That's 10%. That's 1%. £1. Is that right? 0.
No.
10%. So 10%'s £100. 1% is £10.
It's £10. Yeah, that's it.
Yeah.
So you're getting £10.
That's 1%. That's No, so wait, £100, £1,000, 10%, yeah, is
Yeah.
£100.
Yeah.
Yeah. So 1% is £10.
Yes, bruv.
Yes, but we're getting 0.0. So we're getting 0.1% or
Yeah, go on.
0.2% in some instances. So it's
Yeah,
£2
go
or
on.
£3 on your £1,000 if you're getting
So what?
0.2%. It
There
depends
you
on the
go.
rate. It depends
Yeah,
on the rate
obviously
you're
it's
getting.
dependent, but normal savings account, if you go to Barclays, Santander, NatWest, they're gonna be offering them dumb rates. And
Yeah.
like to me, if I'm putting up £1,000, which is like a lot of money to me personally,
Yeah.
I don't want to be that's not exciting to me. Getting
Yeah.
what
Yeah.
£10?
Yeah. But you're
£10
not
a
even
year?
gonna get £10. If you've got £1,000, and even if the savings rate is 1.5%, yeah. If you've got
Yeah.
£1,000 with a savings rate of one, you're only getting £1.25. It's crazy. So, and we already know inflation's at 2%. So even if you get 1.5%, you're losing zero point 0.5 on your money every single year, and that's compounding. That 0.5
Yeah.
is compounding. So this is what people are starting to realize, and you got to bear in mind. You see this 2% inflation, yeah?
Yeah.
That inflation is not including asset prices. So, God forbid you ever want to go out and buy, I don't know, a house. Like it
Yeah.
doesn't include that asset. Let's say, I don't know, you want to buy some, I don't know, some shares because you want to get a dividend. You like the story of, let's say, Tesla. Like
Hmm.
it doesn't include the inflation in shares. It doesn't include the inflation in travel prices or energy. So a lot of the real things that people actually kind of dream about, like your aspiration could be to buy a nice house, to buy some shares. These assets are going up way more than the 2%. So if you're saving money in a bank to buy a house, every year it's going to get a little bit harder because you might only be able to save, I don't know, 5K, even let's say you can save 10K a year towards your house. It's going to get 2% harder if inflation is 2%. But if houses are going up 5% per year, then actually
You're
it's getting
losing.
5% harder every year.
Yeah.
So,
And compounding as well.
and compounding, exactly. So, the reason I think personally that Bitcoin's doing well is that people, it's like starting to click in people's minds that actually it doesn't make sense. And if you can't get any yield on your bank account, then what's the point in holding cash?
But then it goes back to like the mindset of people, I suppose.
Yeah.
Naturally, you've got some savers and you've got some spenders, and they
Yeah.
probably see Bitcoin as a spending. In their mindset, they probably see it as like I'm spending, whereas I
Mm.
believe that this is an asset class in itself, and it really just protects
Yeah.
you from the inflation that we're seeing now, and it's
Yeah. Yeah.
deflatable, really.
Well, yeah, it's deflationary in that there's less and less coins um, each year, whereas in currency there's more and more currency every year. So it's like they're going in opposite directions. And I kind of think of Bitcoin as this like apex predator. It's hunting all the assets.
Apex predator, you know. That's an apex predator.
Apex predator is hunting all the assets out there, and it's going to come for them one by one. We're seeing it come for currencies one by one. We're seeing it come for companies one by one. And I tell you, the biggest this is the biggest thing that you need to think about as well, is that
Yeah.
in terms of the debt market and the stock market in total, there's $300 trillion worth of total assets, maybe even a little bit more, $300 to $400 trillion. Yeah. Now, off the debt market, yeah, the total debt market, 20 trillion is yielding negative rates. So, like, we're talking about getting 0.1%. That's at least a positive rate.
Yeah.
Do you know what I'm
At
saying?
least.
It's still no good. It's still no good, but
But
at
at
least
least
it's
you're
positive,
winning.
right?
Yeah. At least you're winning.
At least you're a little bit ahead. But yeah, inflation's 2%. But actually, when you look at your balance, you're getting a bit more. Yeah, the balance is
Yeah.
still going up.
Mm,
There's $20 trillion worth of bonds in Europe and Japan. Yeah, that
mm.
you have to pay them to borrow money. Wait, let me just say that one more
Madness.
time. Yeah, let me just say that one more time. Imagine I came to you, yeah, and I said, Warren, let me borrow 10K. I got a little idea. This is what I think. And you're saying, okay, do you know what? I got a little 10K spare there. I'm gonna give it to
Mm.
you, but I need something in return, which is fair, right? This is how this is
Yeah,
how
yeah.
money works.
Yeah, that's
I
business, isn't
want
it?
that's how business works. I need something in return because if I'm gonna give you my 10,000 and I'm gonna get it back in a year's time, I need to
Yeah,
know that I've got a little reward for my investment in you. Yeah.
yeah.
Okay. Now imagine I said, yeah, that's cool, but actually you're gonna get less back. So that 10,000, I'm only gonna give you 9,990 back. You're gonna think, wait, so I'm paying you £10 for you to borrow money. This is where the debt market has gone. There's
Yeah.
negative yield in debt. And if there's 30 trillion of that, you have to ask yourself the question, right? How many the reason that that is possible is because that is seen as zero risk money. Yeah.
Mm-hmm.
So if you're a large institution and you've got a big balance sheet of, let's say, 100 million, you're going
Yeah.
to say, okay, well, this 100 million, I want it to be safe. Where can I put
Mm-hmm.
that 100 million?
Yeah.
And you're going to look for US debt, maybe UK debt, maybe European debt, maybe Japanese debt, because that's kind of the debt that's seen as safe.
Mm-hmm.
Yeah, they've never defaulted. They always pay back. You might get a little bit less, but your money's kind of safe, right? Yeah.
Yeah.
But it doesn't make sense. If there's 30 trillion worth of negative yielding assets, how much of that needs to go into Bitcoin? Because people are going to start thinking, well, if Bitcoin is a store of value, then I might as well store my value in this Bitcoin network that is going up.
Yeah. And it's continuously going up. This is not like, let's just break it down from this time last year. What's the X on that?
This time last year.
It was I believe it was like 3,000 in March or
Yeah, so I guess at the start of the year it was 9,000, crashed down to 4,000. So let's say at the start of the year, 9,000 to now, we've done a 4x. If you were to catch it right at the bottom, you would have got a 10x. So
so let's
unlikely
just
to
say
have caught it at the bottom,
4x.
but yeah, at least a
Let's just
4x.
say
Yeah,
so if you was to put, let's just put £1,000 here, if you was to put it into your savings account, yielding you a 0.01% return, you would have got 10, was it £10?
yeah.
Yeah,
So wait,
you
say
would
that
have got
again. If you got a what?
a 0.01% return.
What do you mean 0.1? Are you talking about interest rate?
Yeah,
Yeah. So if you put £1,000 in, and that was getting you 1.5%, yeah, your monthly return, yeah, would have been about £1. If it was a 0.1 interest rate, you would have been getting about 10 pence per month. So yeah, about £1 return.
so £1 return. So if you put that same 1,000 into Bitcoin at the start of the year, you would have got 4.5K, let's say.
Let's call it that. Yeah, 4.5K.
Like, this is not a joke.
Yeah, and that's the thing. What Bitcoin is still very small. We're talking about a $700 billion asset that could be the new kind of, as they say, goal point 2.0, but what people now see as safe haven or store of value. And that's why I say there's like this wall of money that's going to go into it, because if you buy one Bitcoin, yeah, fair enough, it's expensive now, $40,000, but you will always have one of 21 million. Yeah, you buy £1 or £1 in the pound network, you've got £1 off. I guess at the moment it's 3 trillion, but tomorrow it might be 3.1 trillion. Yeah, you know, like 2 years from now, it might be £1 out of £5 trillion. And so it's like once you've kind of staked your place in the Bitcoin network, that one Bitcoin or point one Bitcoin can never be eroded away from you. There can never now be 40 million coins, and actually you've got half the amount of coin that you had previously.
Yeah. And we're not saying to go out tomorrow and buy one Bitcoin for 41 grand. We're not saying
Yeah,
that. Like,
yeah,
we're not saying like, do you know what I mean? Do you know what I mean? Just
yeah.
do
It's
what
not
you
financial
can.
advice. Yeah,
Yeah. Just do what you can afford. Like, and just, or not do it at all. It's just our views.
yeah,
Like myself, my personal journey is I've bought a percentage of Bitcoin. So, and I'm steadily throughout the year gonna leverage in and bit by month, just add a percent, 1%, 1%, 1%. That because that's what I can afford and what I'm comfortable um using and leveraging. So it's all, everyone has their own journey really. So that's what we're trying to really just activate your brains as to think of other options. Because with these results and the way the climate is right now, you have to be, if you're switched on, you have to be thinking, I need to diversify my portfolio. If I've got 10,000 in my savings account, you have to be thinking along those lines, or else you could just let it stay and be happy with your 1%
mm,
return,
yeah.
and then yeah, just go from there. But just have a little thought and just and do some research. You don't have to buy a full Bitcoin. You could buy it as a 1% of coin, but at least you're
Mm,
in. At least you're in. Um,
mm.
and yeah, really, that's what I would say to like the everyday person who's listening to this. It's just an option to really look at and investigate.
Yeah, yeah. Do your research, work out what works for you. But yeah, same as you, Warren. Personally, on a monthly basis, I'm just allocating um, my personal funds towards Bitcoin. So, you know, if that's it could be a percentage of your saving. You know, you might not feel as certain as perhaps we do, but it might just be a percentage of your saving. But yeah, just think about what's best for you, how you feel, do your research. This isn't financial advice, but yeah, just look into it.
Yeah. So just rounding up really on today's topics and today's title, will Bitcoin reach the $1 trillion market cap? Me personally, I think yes, without question. It's just a matter of when, really. Um, and I'm excited for the journey for this year. What about
Yeah,
yourself,
yeah.
Nathan?
Yeah, same. I think it's as I said, a matter of when, not if. And I think even maybe within the coming years, we'll see Bitcoin become bigger than silver. So silver is a $1.4 trillion asset. We'll see it eat silver. We'll see it then go to for gold. We'll see it just consuming. And I think of Bitcoin kind of like this black hole of money. And it's like once people get it, once it clicks, it's like, okay, I can own a piece of this digital network that has a limited supply and no one can take those coins away from me. I can send those coins around the world for hardly any money within 30 minutes. Um, and eventually it will be a no-brainer. But I think
Yeah.
now is the time where people still don't really understand it. So it's down to you really to do your research and get involved.
Yeah, definitely. It's in its infancy phase, but if you compare the internet right now, I would say
Mm.
is the best example. When we were young, going to school, it was the dial-up connection, AOL. You had to listen to that that annoying
Yeah.
startup connection. That's what I would compare Bitcoin now to. It's really in its infancy stage, because it's only been around what 2009 it was done, or founded in 2009.
Yeah, yeah, 2009.
Yeah.
And even
So
go out there, go in there and read the white paper. You know, if you're interested, read into why Bitcoin was founded, and you know, ultimately it was born out of that 2008 credit crisis when all the banks were failing and governments were bailing out the banks. It was born out of that, and it was designed really to counter governments being able to inflate away the purchasing power of individuals. That's kind of
yeah,
what it is. And if you understand that, if that kind of clicks in your head, then you'll start to understand the value of Bitcoin. And I think we're privileged in, you know, the UK, the US, the West, that we don't have 10, 20% inflation. You know, people in South America and countries in Africa, they're kind of familiar with the idea that, you know, you can have hyperinflation. We've kind
yeah.
of
Look at
never really
Brazil.
seen it. Yeah, we've never really seen it. So we don't, it doesn't necessarily click. But you speak to someone in Brazil, they get it straight away. They're like, okay, this can't be inflated away from me. Perfect.
Mhm.
Um, so yeah, over time, it's only going up.
Yeah, I think that's it really. I think we've covered all the topics
Yeah,
that we wanted to discuss, and we've
yeah,
explored various avenues that it could go. And I hope that we've tried and really just make it easier for you to understand, whoever's listening, as to Bitcoin. And yeah, just join us on our journey, because we're not experts. We're just switched on guys trying to make a bit of money out here. So um,
yep,
yeah,
yeah.
if you've
Just
got
trying to
anything to
stay in
add,
the race. Just trying to
yeah,
stay in the
man.
race. Yeah, that's it. That's it. Perfect. Yeah, do your research. There's lots of people out there that can kind of bring you up to speed. So yeah, that's it.
All right then. Episode 2, Trading Trenches done. Watch out for episode 3. There's big things are going. We're gonna be on YouTube very soon. And yeah, just gonna have quality content that you are free to anyone that wants to listen. And
Yep.
yeah, just join us on our journey, man, as we grow.
All right. All right.
All
Bye,
right.
people.
All right, Nathan. All right.
Cool.
Trading
Cool, man.
Trenches out, over and out. Take care. Take care.
Peace.